It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, July 20th, 2015. Hope you guys had a great summertime weekend. I know, man, that time just flies right by. I hope you spend some quality time with family, friends. Hope you're rested and refocused, though, because we get a big week ahead of us, especially on our nightly newsletter. The word of the night this evening is strong trends. We got some flag patterns. We've got some real strong trends going on right now all over the place here. Equity markets going higher. Commodity markets going lower. I can't wait to crack open this nut with you guys here tonight and go over our charts and get ready for tomorrow. Before we jump into tonight's newsletter, and I get another jam-packed newsletter for you guys, I do want to remind you a couple things. First of all, I teach everything we're going to talk about tonight in our newsletter to all of our students here at School of Trade. We got 3 levels of membership. We get a great free trial. Check it out at schooloftrade.com. I'll talk more about that towards the end. Also, I want to make sure to remind you to watch this video on our trading blog right now here at sidewaysmarkets.com. If you're watching the video on our YouTube page, that's wonderful. There's a plethora of trading videos on our YouTube page, but there's a lot of value on our trading blog. If you're watching the video on our YouTube page, follow the link in the description of the video, and that will take you over here to our blog. Really, there are 3 main reasons why it's in your best interest to watch this video on our trading blog. One, you can download all the charts that you're going to see me using in today's video just below the video there on the blog, right where it says click here to download those charts. Second thing, upper left-hand corner, I'd love to give you a free pass. Come out and test drive our live trade room as a guest. Come out and see me this week in the afternoon. I would love to welcome you guys aboard here. If you're not a member of School of Trade, grab your free pass, upper left-hand corner. And members and non-members, make sure you register for our nightly newsletter mailing list. All I need is your name and your email address in the lower left-hand corner. So once again, guys, download today's charts right below the video. Grab your free pass, upper left-hand corner. If you're not a member here at School of Trade, grab your free pass. And of course, last but not least, register for the nightly newsletter mailing list. All you need is your name and your email address. That way you never have to worry about missing another newsletter ever again. Guys, if you grab grab a free pass or register for the mailing list, I'm going to send you a verification email to make sure you get the right email address and to make sure you're not a robot. So make sure you check your inbox, spam folders, junk folders. Find that verification email. I'm going to need it from you to verify your email address. You ready to rock and roll? Once again, hope you guys had a great weekend out there. Back to the grind here this morning. Who happened on gold? Well, we knew it was bearish. Supposedly we had a fat finger or a stop run or, boy, you name it. You ask 10 different people, you'll get 10 different opinions of what happened here. And you want my opinion? We get a bearish market here on gold. And this is one of those examples here. This is the gold futures. This is the 815 contract. We got about 2 more weeks left of this contract here. Commodity markets got a strong dollar right now. That's really pushing these commodity markets. All of the metals, all the energy markets here pushing lower here. This is the first of 4 markets that have some pretty strong trends right now. What are we seeing on gold right now? Well, let's break this down. The first thing I see is, and you can see it's written up here, top of the chart here again, download these charts right below today's video. Gold's trading inside a bear flag this evening after a tremendous push lower overnight. Bear flag starts out with a strong push lower, and then it's not really that lazy right now, but typically speaking, though, a very lazy channel. Now, what makes this a flag is the fact that it's the channel going higher. If it was a spiking channel, it would spike down, and then it would channel down. Right? So this isn't a spike in channel, this is a flag, because what you're seeing here is you're seeing it spike down and then flag back up. It doesn't really look like a flag when it's a bear flag, but a bull flag, which is where the term comes from, a bull flag actually looks like a flag. Right? Most likely given this name back in the old days when you really couldn't sell short, right? It was just buying only. So that's what it is. It's just the opposite direction. Spike down, and this again, what is typically seen as being a lazy channel. So let's talk about this. A bear flag is a strength pattern. It's usually seen around big round numbers, stop run in this case. Maybe it's a stop run. I'm not going to get too wrapped up in the why it happened. But the bottom line is flags, spiking channels, pennant patterns, these are very common after big news events, right? We get this strong push in one direction. In this case, didn't come after a news event. Again, depends on who you ask out there. I'm not going to worry why. All I know is I can see it happening on the chart. What is that? That is seller strength. Okay, now I want you to think about this. Follow the bouncing ball. If we have an extreme push down and a ton of strength in these sellers, who's left to keep selling? Think about this for a second. Who is left to keep selling, right? How do you think this market took off the downside like this? It didn't just do it on its own. It needs sellers to fuel the push. So, of course, now what ends up happening is sellers start taking profit down here. And ultimately, the only way that we can get the trade to keep pushing lower, only way that price keeps going lower, is one of two scenarios. Scenario one, we have what we call other time frame traders. Okay, what does that mean? That means now we have to involve daily chart traders, weekly chart traders, monthly chart traders. Okay, so the day traders pushed it down. Now we need weekly traders, monthly traders to get involved now, other time frame traders. In other words, all hands on deck. We need more sellers to come in if this is going to keep going. Now, what usually happens is number two. If we have a strong sell-off, that's the flagpole. Strength from these bears, right? We need some more bears. Or what if we don't have any more bears? We're going to need higher prices. Now, these higher prices are going to entice those bears, right, to get back into the market again. Also, the higher prices are a result from the sellers taking their profit, right? Like a smart seller should, taking their profit after that huge, just tremendous push down. So the bottom line is right now we have a ton of strength to the downside here on gold. We have the same thing, all right? A lot of strength on other markets today too. We'll take a look at that in a second. And it's producing this bear channel. So we know what causes it. We know what's likely to happen. In my opinion, there are really three main pieces to a bear flag or any flag. First, you have the spike down, right? Strength. Then you have that lazy channel. Okay, the lazy channel can be frustratingly lazy. It really can. And we've talked about this over the last few weeks of the summertime because, well, for whatever reason, we have seen quite a few of these over the last few weeks. Now, remember, that lazy channel is because we either need higher prices or we need, other time frame traders to get involved to keep pushing this price down, right? The crickets are chirping. There aren't that many more sellers left involved unless what? Unless the sellers who push this thing down, unless they start taking their profit. So the third thing is, and if you're a student of mine, member of mine, you probably are finishing my sentences. The third thing is a bigger correction, right? A big correction. And that big correction comes from the need to have higher prices before we start selling off again. And it's also fueled by the profit taking, right? So spike down, lazy channel, right? Stubbornly lazy channel, frustratingly lazy channel. And then where you're really going to get all hands on deck again is when we see a nice bigger correction before we make the move down. So when you look at a bear flag, what you really see most often, again, lazy channel, but then, of course, you end up seeing this larger correction and then the next push down. And so what we end up doing is, and you're going to see this later on crude oil, is we end up going A, B, C, D, and that's what typically happens here on these flags. Now, this is a very slow time frame in the kind of the short-term day traders that we are here. So there's a lot that can happen between now and when we get that correction and back down. But this is what I want you to be thinking. Strong spike, lazy channel, big correction, finish the move off. So what I'm going to be looking for is I'm going to be looking for selling opportunities at the top of the lazy channel, right? Kind of like at the lazy river or something like that at some water park, right? That makes sense in the summertime. And then, of course, we have our larger correction. Where do you think we really want to sink our teeth into? Yeah, the larger correction. In fact, this larger correction is made even easier because you can catch the buyers thinking it's a reversal. That's where you're going to make the easy money, catching those buyers on the larger correction. So now we have this look at this now, okay? So where are we thinking here? Well, again, this price should continue to give us selling opportunities up at that channel high, right? Remember that lazy channel, right? So sell channel high, wait for price to come back up, right? Sell channel high. And then eventually one of these tests of these highs is going to be that bigger correction. And that'll be the one that we're looking to really sink our teeth into and get to selling. So bottom line is this. If you're a bear right now, right, this type of chart pattern tells us to look for selling opportunities at the highs of the lazy channel, right? And of course, also after a large correction. What if you're a bull right now? Okay, so if you're a seller, you know what we're looking for, right? We're looking to sell up near these highs. And then again, I'm going to look for that larger correction. And then I'm looking for the buyers to try and fail. And I'm going to be selling right into those buyers' failures on the way back down, right? Probably going to have to wait for that bigger correction though. Okay, probably not going to happen tomorrow. So what we're going to be looking for right now is, again, if you're a seller, be focused on selling these areas up around this high, right? That's where you're looking for, up around that high. That's where you're going to get the juicy stuff. Okay, what if you're a buyer? If you're a buyer now, in my opinion, the buyers really have the more recent opportunities. First of all, if we do end up grinding down to these lows, which would be expected, I'm looking for sellers to try and fail so I can buy. That's the one thing you want to keep in mind, buyers. If you're a bull right now on gold, and I can easily see why a lot of you guys may be thinking, well, big drops, big pops. Well, I do agree with that, but you got to remember you're in a downtrend here. So although price can go up here, you've got to treat every single buying opportunity as a scalp until proven otherwise right now on this gold. The big thing I want you to remember is if you're a bull on gold right now, do it either at range lows or do it at resistance areas overhead. Now, why would I buy at resistance? Well, here's my next statement. If you're going to be a buyer, the easiest way for you to buy in this strong bear trend, and we're going to talk about this on Crude a little bit later too, if you're going to be a buyer right now, you want to wait for sellers to try and fail. So scenario one, we go lower. Sellers try and fail. That's the way you want to be a buyer. We go higher. Sellers try and fail. Whatever you do, don't buy into resistance. Wait for resistance to be tested. Look for those sellers to try and then buy right into those stop losses. Now, don't forget, I'm giving you the basic strategy and the basic areas of interest here for tomorrow. Come see me in the trade room and we'll do this live in real time. Remember, we're day traders here, so we're looking at this a lot shorter time frames here tomorrow. These are going to be the basic principles and what you should be looking for, the general areas here on gold. Careful on this one tomorrow. This lazy channel, I keep thinking lazy river. I got water parks in the brain. This lazy channel, it's going to make you think. It's going to make you think this is a bullish market, but it ain't. It's a bearish market. Remember, sellers, stay patient up near these highs, and if you see that big correction, don't take the bait. Wait for the buyers to try and then sell it right back down in. Again, come out and see me tomorrow for a real-time analysis on that gold. Here's another one of these strong markets. Now that you know the plan, right? Remember, bearish trend. If you want to be a buyer, buy into seller failure. If you want to be a seller, get up off these lows right now. Now here we have the euro. The euro is dealing with this soap opera they call Greece right now. Euro is bearish, but look at this. We're trading all the way down at the lows of the range, which means just like we talked about on gold, a little bit different on gold. We don't have as much drama on the euro right now, but we're looking for bear traps to buy the lows. And sellers, we got to stay patient to get up off these lows in order for us to get the best selling opportunities. Okay, so here's one way of thinking about it. First of all, here we are down at major support. Now, like I said before, if you want to be a buyer here, right? If you want to be a buyer, the best way to do it is wait for the sellers to try and then buy right into those stop losses. Use a quick first target, tighten up that stop loss, remove the risk, and you're off to the races, and do your best to hold the runner. Okay, I'm going to give you plenty of resistance targets overhead. Those will make for great targets for your runner target. Remember, though, if you're going to buy, two things, right? Seller failure, look for the sellers to try and fail and buy into those failures. What if you want to be a seller right now? If you want to be a seller, the best way to do it is to wait for those resistance areas overhead, right, and then sell those resistance. How do you do that? Well, you could look for buyer failure, right? Same thing we talked about for you buyers, looking for seller failure, right? Kind of flip-flop it around. Now, of course, you wait for us to test resistance, buyer failure at resistance, you sell right into those buyers' failure. Another way to do it, you might be shaking your head right now going, Joe, I don't want to wait that long, man. I don't want to wait until we go all the way up. I want to find some short-term selling opportunities here. How do I do that? Well, it's quite easy. As this price starts going higher here now, look for the buyers to try and fail at short-term support. The key is if you want to sell these lows, it's trade account suicide to sell at these lows right now. So wait for the buyers to get this thing going, then find some short-term support levels, wait for them to try to buy those support levels, and if you see them fail, that's your chance to sell before you get up to these major areas of resistance right now. So don't forget, bearish market here on the euro, just a few areas of support down here. We got literally a major 2015 range low support right there at 10, at 0840. On top of that, we've got measured moves, check. We have measured moves, check, right? We have literally three big time areas of support down here. Not to mention we're coming out of a trading range, and oftentimes those first attempts to break out, they have a very difficult time with it. So, moral of the story is, sellers, be very careful selling at this support. I think the best thing for you sellers to do right now is going to be to wait for this price to come up off these lows. And again, I would recommend, if you want to sell aggressively at these lows, get it up off the lows, find short-term buying opportunities. If you're a seller, you're not going to buy. You're going to wait for the buyers to try and fail in this downtrend, and that's going to give you those short-term selling opportunities for tomorrow. Members, you know what I'm talking about, right? Those long failure opportunities, get back above the moving average and then catch them on the wrong side. Okay? What if you're a buyer, though? If you're a buyer, I think you get the easy job right now as a buyer right now. Just simply look for these sellers. They've already tried once to go lower. Look for them to try again, and then buy the failure. Just remember, though, if you're a bull right now, you're counter trend here. So quick first target, tight stop, lock out that risk as soon as you can, and do your best to hold your runner up to these targets waiting for you above. Guys and gals, don't forget, we get a lot of support down here. Be very careful being a seller right at that support. Get it up off that support, and then look to get above the moving average, and then drop it back down in. That way you've got some room, right, to get that, to at least get off that area of support. Continuing here with our trend of strong trends today. Oh, you got to love the English language. We're continuing here with the strong trends here right now. E-mini S&P, just a little perky. I mean, just this thing is hot, right? I mean, you cannot stop this sucker right now. Well, you know what I always say. Well, the cat's away, the mice will play. And right now, you've got a very, well, it's easy to see. We get a strong dollar. It's making this price really cheap right now. You've got really no other game in town besides U.S. equities. And hello, newsflash, all the smart money in the market, yeah, they're busy gassing up their boats with this $50 a barrel they're getting on crude right now, which, by the way, is not even showing up in the major cities right now. Those retail gas stations are making a killing off us right now. Luckily, us day traders, though, I can ride a bicycle to work. I can ride my pajamas to work every morning, so that's very nice of us. Anyways, back to the plan here. E-mini S&P is bullish. but we're trading right at the highs of this range, which means what the hell are we going to do at these highs? I don't want to be a buyer at these highs, right? I don't even want to put your account to work buying these highs. I know. But Joe, we get a strong trend, and you can buy the highs in a strong trend. Sure. You let me know how that goes over a long period of time. I do understand in a blindly aggressive bullish market, you're going to get lucky buying those highs, and you might just make a fortune on it. But the reality is, over the big, long history of being a trader, if you buy the highs, it's going to bite you more times than it doesn't. I do understand, though, that there have been some very, very bullish markets over the past year, and that has conditioned us to think in the short term. Remember, these markets have been around just a little bit longer than 2014. So historically speaking, though, you buy those highs, you're going to get burned, right? It's not a good idea to pay the most expensive price for anything. How'd that house go at 2007? Anybody buy a home in the U.S. in 2007? But it looked like it was going to keep going higher. Well, it didn't, did it? No, and it bankrupted us in the process. Just a little lesson that I think we've all forgotten about, right? Almost 10 years later. So again, don't buy the highs. Stay patient, okay? Put on the big boy and girl pants and wait for the price to come off these highs, and then look to buy the pullback. Look for the deeper correction. At least that's the responsible way to do it right now. So that's my plan here for you guys on the S&P 500 and the rest of the E-minis, which are just apparently blind, right? They're blinded by this bullishness right now. So we're trading at the highs of the range, which means we need to be looking for bull traps at support levels to sell these highs, right? You know what I'm going to say. Take what I just said on gold and euro, and now flip-flop it around, and that's the exact same plan here right now. So what if you want to be a seller here on the S&P? Well, tough. You're going counter trend. But the most important thing, if you want to sell these highs, buyers try once, twice. When they fail, I'm selling right into those stop losses. Get to it quick. If you want to be a seller up at these highs, the best way to sell the highs in a bullish trend, not a bearish trend, in a bullish trend, is for buyer failure. Try once, try twice. No, don't want to go. All right, take my profit here. Sellers will come in and sell these highs. Okay, so buyer failure if you want to be a seller. Get to it quick. Sellers, you guys have the short-term opportunities right now. But buyers, this is the tough thing. This is exactly the opposite of what I just said about the euro. Remember the euro grinding lower? You got to get up off those lows in the euro. Here we are now on the E-mini S&P. You've got to get off those highs if you want to be a good buyer, right? To get the best price. I love the fact that we're in a bullish trend. I want to be a buyer. But I can't stomach buying these highs. And again, I talked about it before. You might get lucky from time to time buying those highs, but think of it this way. How do you make money in Vegas? How do you make money in Vegas? No. You don't count cards. No. You walk in, you make a quick hit, you take your money, and you get the heck out of there, right? Why? Because those odds makers know the longer you stay in that casino, the more likely you are to give all that money and some back to the casino. How do you make money in a blind bullish market? And if you made some money buying those highs, you better take that profit right now, because chances are it's not going to last very much longer. The odds are not in your favor, just like sitting pulling the wheel in a casino. The longer you stay there, right, the more the odds are stacking up against you to keep making money. Okay, so bulls, wait for the deeper pullback. Wait for that deeper pullback. Now, if you don't want to wait for that deeper pullback, what can you do? Wait for the price to come off that. You know there's going to be a retracement. Sellers are going to try to sell it. If that fails, buy right into that stop loss. So either way you slice it, if you're a buyer, you've got to come off these lows. The question is, come off these highs. The question is, are you going to wait patiently to get the buy on the pullback? Or are you going to be a little more aggressive here, wait for a new lower low, wait for the sellers to look for a retracement, you know what I'm talking about, right? And then buy right into their stops. It's a little bit more aggressive, but that's the way you're going to have to play it if you want to be a buyer without just gambling and pushing the button at the top of that range. Again, if you're a seller, I'm looking for buyer failure to sell off those highs. And then if you want to keep selling it, look for buyers to try, fail, buyers to try, fail, and ultimately the target is going to be down around this, 2090. The way it feels right now, and this is why it's always tricky being a trader, the way it feels right now, it feels like this market's never going to stop. And that should be the first clue that we really got to be careful buying at these highs, right? Didn't it feel like that housing market was never going to calm down in 2007? What happened? Yeah. Well, if you don't know, I think there's a few books out there that were written on it. Read up. Now you know the plan here for the S&P. Once again, you don't need to trade that E-mini alone. Come out and join me tomorrow. Let's see here. What else we got here? I figured we'd save the best for last. Look at this market here. Just a little bit bearish. Another example of a strong trending market that we're dealing with right now, right? All four of these markets are either at their highs or at their lows, and that poses a problem. In other words, again, back to where we were before, same thing as gold, same thing as euro. Well, not so much as gold. But now we have a very similar situation to euro. It's the opposite direction of the S&P. We're at the range lows right now, and we're grinding lower. If you're a seller, you definitely don't want to sell into, let's see, which support level should we look at? A, B, C, D, right there. You've got major support, 49.5. A, B, C, D. Extension support there, $50 a barrel, shocker. Short term, A, B, C, D, additional support. We have a ton of support levels waiting for us below. Sellers, whatever you do, don't sell directly into those support levels. If you want to be a seller, there are two ways to be a seller right now. One, stay patient and wait for price to get back up to these resistance areas and then look for either buyer failure, reversal patterns, or once it makes the turn, start selling it after it makes that turn. Don't just blindly sell it. What's the more aggressive way to sell? Wait for the price to get up off this low. Look for the buyers to be buying a pullback. You know they're going to try to buy a pullback, right? The buyers will try to buy a pullback to send it higher. Well, if that pullback fails, that's your chance now to be an aggressive seller. Whatever you do, those sellers, get up off those lows. Don't sell that low. Do not sell that range low. Again, you might get lucky some of the time, but you're not going to make money over a long period of time like that. If you do get lucky on selling those lows, you better take that money out of the market because it ain't going to happen very often consistently, right? Consistently. Now, we have a huge few levels of support down here. 2015 extension support, and that's our low of the year right now. 47.04, give or take a couple ticks depending on what resource you use, right? So right around $47 a barrel. You know that's what sellers are hunting for. You know it's what they're hunting for. Whether we're going to get there or not, that is to be determined. So what I'm looking for right now is I'm looking to stay to the sell side on the crude. Again, get up off those lows and either look for buyer failure to keep selling short or sell it right at those major resistance areas. What if you're a buyer? If you're a buyer right now, just like we've said, right? I'm a broken record. If you want to buy in a bearish trend, what's the easy way to do it? Do it quickly, do it near the lows, and do it at short-term resistance. For example, here's a level right here, 50.58. 50.58 is a prior area of support. That's a great example of an area where you know there are going to be sellers that are trying to get in there. Well, that's a little bit aggressive to be selling right at that low, right? So be ready to buy when those sellers try and fail. You know we need to come up off these lows here in order to get the best selling opportunities. So sellers, stay patient. Buyers, get to it quickly. And in my opinion, if you're going to be a buyer, do it at these major support areas that I've conveniently located before, right? Do it at major support and do it on seller failure. Now, guys and gals, if you have no idea what I'm talking about here tonight, I want to make sure that we give you all the tools so that you can do this on your own. We have a live trade room here at School of Trade. I want to invite you to come out and join us here at School of Trade. That way you can execute this plan with a community of traders. Everyone working together in our chat room, in our trade room, to make sure we all have a great day every day. Don't forget, download those charts for tomorrow. Grab your free pass, and if you need more information about membership, head over to schooloftrade.com and get a great free trial here at School of Trade. I've got 3 levels of membership. We don't charge monthly payments. We got lifetime memberships, and we always have someone standing by 24/7 to answer all your questions. Boy, a little bit long video tonight, a little bit long newsletter. Got a lot to cover, though. Remember, the key term right now is strength. There's a lot of trends going on right now, so get down off those lows for the S&P, get down off those highs for the S&P, get up off those lows for crude, gold, and euro, and follow the plan. Follow the plan. Hope you guys had a great weekend. Welcome back to the nightly newsletter. Shall we do it again tomorrow? That's a good idea. Let's wrap it. Let's do it again tomorrow. 8 a.m. Eastern time tomorrow morning. Trading opens up, and 8 p.m. Eastern time. We'll be back out here for our next newsletter. My name is Joseph. Be well out there. Be nice to each other. Adios, amigos. Bye-bye for now.